today's analysis, what we'll be looking at will be the US core PCE price index at 0.2% that we saw last Friday. We'll break that down, and also what could happen in the markets tonight with the US banks on a Labor Day holiday. But first, all right. So again, let me know what you think about the new format, if you like it or not. So we are looking at the core PC. First off, we'll look at the core PC price index. Remember, again, disclaimer applies. If you have any questions at any point in time, please feel free to put it into the chat and let me know. Also, you can help me out massively by remembering to click on that like and subscribe button. Okay, so again, now back to Friday. We didn't have a session on Friday. Markets were just pretty much sitting across. I was busy with some other stuff as well, so I thought, take the chance, not do a session on Friday, have a bit of an earlier end to August. I hope August has been awesome August for all of you, and I hope it's going to be a super September coming up for everyone as well. Okay, so with that, what we ended August with was the core PCE price index for the US. Core PCE was at 0.2%, pretty much as expected. And as a result of that, you see that the Fed Watch 2 on the CME group is, when it loads, very, very highly on the cut of a 25 basis point, less so on the 50 basis point rate cut suggestion. So with that, what we're looking at is that's why we're seeing the dollar climb back up as a result, right? So you see that on the 8:30 on Friday, what we saw as I'll move that slightly to the side. What we saw as a result of the news, this was 8. It came out and the dollar pushed up and continued pushing up over the Friday night. Oh, Friday night for me, right? Because at 0.2% on core PCE price index, that suggests that the Fed does not have to go too crazy with the rate cuts. It's at 0.2, 25 basis point as a starting action would be or should be sufficient. So that's what happened on Friday last week. With that through to today, a whole bunch of news, some PMI numbers being released, but the main thing is tonight, Canada is on a Labor Day long weekend. The US is on a Labor Day long weekend. Had a question from John and also Diana about this Labor Day long weekend. Is it going to be, are we going to see slower market conditions? Very likely, right? Very likely we're going to see slower market conditions. Liquidity will be thin, volatility might be low, but through my years of trading, what I've seen or what I've experienced is that very often when I anticipate that markets are going to be quiet, or when I think that liquidity and volatility might be low, what happens is we get a bit of a surprise. It could also be because that the dollar, is on a holiday, or the US is on a holiday, a long weekend. The dollar gets a little bit undefended, right? It's undefended, so it might bring about a little bit more volatility as well. So something to still watch out for. We anticipate quiet, steady markets for today, but we might still see a jump in volatility. Okay, so watch out for that. With that said, thanks for that, Linley. Hey, Ju Marinas. Hey, Anil, how you doing? Hey Stefan, hey Angel Case. Now with that as well, tomorrow, right? So one thing to note is that um, although tomorrow is the first Tuesday of the month, we do not have the RBA with the interest rate decision. It is, you can see it, right? It is not even in the next round, right? So, but there has been earlier today talk about, where was it? The RBA to stand pat as dollar, stand pat on the interest rate decision. All right. So something to watch out. Not much news for, well, not much news for today. For tomorrow, we have some CPI numbers for the Swiss. We have the manufacturing PMI for the US, GDP for Australia on Wednesday. This will be quite interesting. We're looking at 25 basis point rate cut to come from the Bank of Canada. Watch out for that. And then we have unemployment claims ADP on Thursday, followed with non-farm employment change data to be released on Friday. Bearing in mind that it is now down to employment numbers, right? Remember what Chair Powell said during the Jackson Hole Symposium. It almost seems like fight with inflation is done. It is now down to employment numbers again. Okay, so that's what we're watching out for. With all that said, we'll look at the dollar index. Okay, we'll look at the dollar index first. Now, take that away. We're done. Oops. Take that one away. Right, so dollar, like since we spoke about it on Thursday, we were right there. We were expecting it to push up towards that 101.60 level. It got to 101.60. It went as high as 101 almost 101.80, and then now it's pushing back down again. So it's somewhat still according to plan where we were looking for it to go up, test that trend line, and then push back down again. Right, so I had this extension just to see where it could head towards. We'll take that away for now. Now, if you look at this, taking that away, I will still anticipate for it to push back down. However, what I'm looking for, let's see, right? It needs to, make sure you can see that, okay? Yeah. It's pushed up, it's broken that level, it needs to come back down. And actually, we don't need 23. We have that point there. 38.2 is way up there. Okay, and then we don't need 38.2. We probably want to see 50, which is up here. So that resistance level is now back into play. The trend line, I could adjust it slightly just to keep it along that trend line. And now I'm looking at it testing. So if it breaks higher, it needs to go past 101.80 to get to 102. Right? That's the first thing we'll think about because it's pushing up. But based on what we were talking about from Thursday last week, you would also see a bit of a channel to the upside. So if it does push down and break that channel and it breaks below 101.50, we could see it push back down. Although, with that said, I think that it might be, with no major news, I don't think it will be quite a immediate thing. It's not something that I'll be looking for with a lot of bias, all right? So main thing right now is that we are on the 2nd of September. We are looking at the dollar index. It is within the dollar index is within the bullish channel, right? It's within that bullish channel. It looks like it's bouncing off the bottom of the channel to the upside. You're thinking that if it's upside, it needs to break, well, could trade up to 102 resistance, but needs to break 101.80, right? If we're looking for that breakdown on the dollar, then it needs to go past 101.50. Downside only if price breaks below 101.50, right? Which is also that 23.6 level, which is just right there. That makes sense. 26.6%. Okay, so I'm looking at this. I am still looking for that longer term move back down, but it does look like it could push back up slightly, staying within that channel. Also because there are no big reasons why it could reverse strongly, with, like we were talking about this, I think last week or um, the week before as well, is that it could come to a point where it was such a priced in scenario. We kept seeing the dollar drop so much, anticipating a rate cut. Now that the rate cut seems to be 16 days away from this rate cut, seems to be going to be at 25 basis points. You know, a rate cut scenario priced in, we're seeing the dollar bounce back up, right? So I'm looking at a bit of a consolidation, some upside towards that 102 level, but I'm getting ready for a push back down if possible. Does that make sense so far? Put it into the chat and let me know. And if that works, then we'll look at the Kiwi dollar. All right. Kiwi dollar on Thursday, we said could come down to test this support level before pushing back up again. It took a long time, right? It took a long time to push down. Now, still not really testing this support level here at 6220 yet, right? It's still coming down slightly, but I am still looking for that bounce. So if I'm sitting here, I'm still looking for Kiwi dollar. And what, I'll take that away first. What you'll notice here is, hey Edwin, how you doing? Test, push up, test, might break that level and push back down, right? Very ugly head and shoulder here, but that's possibly what we're looking at this point, which is why the 23.6 retracement level, and draw that more specifically, that point, and that support level at 6220 is going to be quite important. Right, so now I'm looking at this. You want to see a reaction at this point first, right? And look at it pushing down right now. Again, no news on the Kiwi all the way even through tomorrow. No major news on the Kiwi. So I'm looking at this. I'm giving it a chance. All right, give it a chance that if it does break that support, I was going to say, could bounce back up, but I'm thinking now with that ugly head and shoulder kind of pattern there, below 6.2, below 0.62, you would have a 30 pip, 25 pip stop loss. You would have a 60 pip take profit to the downside, right? And also because you can see that the Kiwi dollar has been slightly overextended. So we're looking at it to test, push back down, break that support to the downside. Okay, so Kiwi dollar here, I'll be looking at, so we're looking at that point. We were looking for reaction. We can keep that, look for reaction at 0.6220. If broken, we will look to sell at 0.62, stop loss 25, take profit 60 to the downside. Okay, I'm looking for this to push back up, which could push this lower. If it doesn't break, then like what we were talking about on Thursday, you're looking for that move. It's a very similar move that we saw. You'd be looking at 6235. You'd be looking at a 25 pip stop. You'd be looking at a 60 pip take to the upside. Right? With that, I kind of like that downward move a little bit more, but we want to see that reaction at 6220. Okay. Then onto the Aussie, right? Why I'm thinking that Kiwi, I'm ready to prepare for the Kiwi to drop back down is because I'm thinking if the dollar strengthens, we'll sell the Kiwi down. If the dollar weakens, then we'll buy the Aussie back up, right? Because if you look at the Aussie here, this is now my resistance, no longer support. We saw that, right? I was actually looking forward to that as it came down and bounced around this point. Take that away first. Bounced around this point. I was looking for it to break back up, but it formed a slight move and then came right back down. So it did fluctuate along that support, now turned to resistance level. It broke that trend line, right? It broke this trend line, so we take that away to push down. But it has found that 23.6 level together with this points where it bounced off. So that's the whole area that we're seeing, right? Where it's bounced off this whole area. As this level signals that it might hold, right? And even though I took this up to the highest point, you'll see that 23.6 forms up very nicely. As this level shows that it might hold, what you're looking at is if the dollar does weaken, if the dollar index does push back down, now that it's pushing back up, you're looking for it to break that resistance level to buy it back up. You're looking at 6810, stop loss 20, take profit. You'd have 40, or you could have up to a 75 to the upside, right? So we look at 40 first. 6810. Where am I? I'm here. 6810. Stop loss 20, take profit 40 to the upside. Okay? Push down, bounce, crossing over, pushing back up. It looks like what could happen is a slight retrace before pushing back up. It's going to be gradual because right now it still shows like a bit of a bounce to the upside. So it might come up to this point and then turn back down. That would fit very nicely with the Aussie to push up. Alternatively, also you could be looking at it to come down and test this level again. 6770, stop loss 20, take profit 30 to the upside, break that resistance, and then continue up. It's, again, remember, analysis for today is really on a expected low volatility, low liquidity session. So it's all in the middle. We're planning for a reaction of either that support or interim support level or that resistance. So we're going to keep our options open right across the board. Okay. Then looking at the Aussie Kiwi, tested that trend line and pushed right back down. That worked out quite nicely. Again, I did not catch, it's not on my regular list to look at. So Aussie Kiwi pushed down, but now look at it, it's pushing back up, driven firstly by the Aussie pushing back up and also the Kiwi pushing back down. That's why you see the Aussie Kiwi pushing up. Now, if you took this point all the way from the top down here, you would see that it came down to that 108 level, 1.08 level that we know we're going to see a reaction. Either it was going to break strongly to the downside or bounce off from. It looks like it's trying to bounce up. At this point, I wouldn't have this trend line. I'll take that away. I don't need that point. And we're actually just looking at that level there. Right? So what you're looking for now is, like exactly like we planned. If that Kiwi does have that big drop to the downside, the Aussie Kiwi is going to have that big push to the upside. If the Aussie has a push to the upside, the Aussie Kiwi is going to have a push to the upside. So what you want to do here is wait for a moment, and then you want to be looking for it to break above 1.09, a nice round number. 1.0910, stop loss tight, no more than 20 pips. Your take profit, I would say, is up there. I think even beyond that. So we got 61.8 here, but I think your take profit could even come up to this point there. All right, so I'm thinking that Aussie Kiwi, you wait for it to break that 38.2 level here. That we've seen it reacting. Break 1.0910, break above to this point up here, and that one here. So give you a 20 pip stop loss, a 70 pip take profit to the upside. Okay? All good. Remember, any questions, put it into the chat. Let me know. Now, with that said about the Kiwi, the Aussie, and the Aussie Kiwi, we look at the pound dollar, which oddly, right, it came down to that support and it stayed there. All right, so this wouldn't have triggered because it didn't come down low enough before pushing back up. It came down right to this point and then pushed back up. It's just sitting right along this key support level here at 1.3140, right? 1.3140, which coincides very nicely with that 23.6 level. I'll change that to a nice dotted line. Dinah says, I think it might retrace back up to fair value and go up on the Aussie Kiwi. It might retrace, so might retrace back down. So I think what Dinah's saying is that it might do that and then go there. Possible. Yes, I would think that that's quite possible. Generally, might retrace, push back. Yeah, so push up, come back down slightly and go up. Makes sense. Makes sense. I agree. I don't know what's going to happen in the middle here, but I'm only looking for it to break above that point. So yeah, quite possible to push up into that fair value gap, come back down slightly before pushing back up again. Okay. Now, what was I going to do? Okay, then pound, dollar, updated that one. That makes sense. testing my support, sitting right there. Trend line, take that away, and it's sitting right across. Okay, it's sitting right. The thing is that because it's sitting right across, it could really at that support level shoot up, break down. I think that I would rather be looking for it to break to the downside. I was reading somewhere, I can't remember where, that there was anticipation that the BOE could start talking about another rate cut, break below 1.3110, 40 pip stop, 60 pip. I actually want it a little bit nearer, but I feel that if it's a little bit nearer, it's not going to be the best place to get into that trade. So I would say below 1.31. Below 1.31, 40 pip stop, 65 pip to the downside. Okay, so where am I? 1.31. I'm losing my points. Where am I? Okay, 1.31, 40 pip to 65 to the downside. But why I'm happy to look for this setup is because if it does push down, looking at the pound dollar having climbed all the way up, I would say that if it does push down, you're going to see a momentum continue to push it to the downside. So this could be your first take profit level. You could drag this down after that, and then you could have a good ride to the downside on the pound. A bit undecided for now at this point in time. Okay, so 1.31, 40 to 65 to the downside. That's what we're going to be looking out for first. I see your comment there. Hang on a second. So 1.31, stop loss 40, take profit 65. Dinah just said that head and shoulder. I think you're talking about not. I'm going to do that first. That one with a bit of a shoulder there. Just that it's a bit messy here, right? So that could be, but I'm actually now thinking that if you looked at it on H4, it might show it a little bit clearer where you have, well, you have that. And then breaking that to the downside. Oops, why not? Okay, so we're looking at that move. Technically, if that's the head and shoulder, then it has broken that neckline, right? It has broken, it also works on the H1 here, right? It has broken that neckline because a neckline would be that. And we could see it push down. Yes, I think that works. I think that works. Thanks for sharing that. So that would support the view that we're going to see we could see further downside on the pound dollar. Okay, but because it's at that support / resistance level, I think that's a neckline, but I think that we would see this whole area as a bit of that neckline. So that's why it needs to break down from this point. Theoretically speaking, that's a neckline, the black line there. Yeah, so it came down, tested, still looking for that push. Agreed. Cool. 1.31. I kind of like this. I like how it's setting up also because it's pushed up that much. But I do want to see it come back down a little bit. I want to see that move. Okay, so that's the pound dollar. Then when you look at the euro, we saw that push down, bounce, and then turn back down again. It's moved down. It's dragged this down a bit. All right, we'll keep that. In fact, I don't really need this. Take that away. You don't need fib levels if it doesn't make sense. All right, only have what makes sense. Keep what makes sense to you. 23, because we have too many lines and bars and charts, well, too many lines and analysis, you get confused. You get analysis, what, paralysis, analysis, or something like that. So you don't want too many things. You want to keep it simple, right? Euro push had that big move to the upside. We've got our fib levels up. 38.2, it dropped down, tested 38.2, had a small retrace, looking like it might push back down as well, right? Might push back down towards that support and that 50% level, right? But I think that it's not worth trying to trade it down. If you look at this, it's only a 20 something 30 pip move to the downside. So on the euro, I do think, while I do think that we could see it push lower, right? I want to actually wait for it to react to that 1.1 level, big strong key level, which coincides with that 50% retracement level as well. We've seen a big reaction at this point on this round number level, so just wait it out, look for that reaction there. Okay, so on to the euro, do nothing for now. We want to see it possible, look for reaction at 1.10. There is also, I mean, initially we were looking at that consideration that at 38.2, if it forms a good push to the upside, you'll see that we have that crossover to push up, right? If you caught this, if you're on a TSRI MACD, I've got a video on that. I got an amazing video on that. Go check that out as well. It's in the channel, right? If you caught that at this point as the TSRI MACD crossed over, you could have caught this move here, right? Your stop loss would be below that point. You'd have a 10, 12, even a 15 pip stop loss. You could have got out at your 15 pip take profit or 1:1 to the upside. That's counter trend. That's counter trend reacting off that 38.2 level from that big move down. So what we're looking for is a continuation back down again if that crosses lower. Okay, so again, euro dollar waiting at 1.10 for that support round number support level. 1.10 round number support level. There we go. Dollar pushing back up. Then, like Diana said, onto the euro pound, could have a good long position. So if we were looking for it to push down and test that support and break, not test, and break that support. But remember, on the pound dollar, we're looking at a head and shoulder which could push it down. All right, euro dollar, we're looking for it to come down slightly, only about that 30, 50 pip move to the downside, while pound dollar, we're thinking that if it does break down, we firstly have a 65 pip. If it breaks that level, we could have more. Then on the euro pound, it came all the way down, right? It sat there, pushed up. This was through July, bounced up early August, came right back down again on that support level here at 0.84. So again, if you look at this, at that point there, right? The euro pound in mid of July bounced around 0.84, had a break, came back in, and then broke out of the 8430 level, and we saw a big move to the upside. Now at this point, again, it's sitting right across. It could push down a little bit. It's fluctuating. It's going to consolidate in this 30 pip range. 84 and 8430. It's going to sit in that range. You're looking for it to break out to the upside at 8440, 20 to 60 to the upside. I was just thinking whether it could break lower, but 0.84 seems to have held very well. Right, there is some downside potential, but it looks like 8340. I think that we might actually see pound dollar. We could see a pound dollar drop, driving the euro pound to the upside. Okay, does that fit with what you're thinking there, Diana? Let me know. Right, so I'm looking at that sitting across, break 84. So what looks like might happen is that it will do that, that, then do that. Okay, that's the look for euro pound. What you want to balance between on euro pound, for euro pound, what you want to balance between is the anticipated drop on the pound dollar and also on the euro dollar, right? Because if they both drop, then the euro pound is going to have a lot of conflicting moves in that area, or bounce around with tails and wicks, because they're contradicting each other for that euro pound. So you want to see one move, then the other one move, or the pound dollar drop by a lot more. Okay, then on to my favorite pair. I realized that I was just looking through my trades for last month, and it's predominantly on the yen pair, and also on gold for last month. So favorite pair here on the US yen. Remember last week we had option 1 and option 2. Option 2 was that it reacted off this point and pushed back down. So that worked out for a little bit before it broke right up. Take that away. Right now on the yen, wait a minute, we don't need 23 anymore because that's done. It's broken up from that. So it broke up and pushed back down right at that point. So I did trade it down earlier today because it came down, triggered my level that I was waiting for. I was anticipating that the yen could, from this 146 level, push all the way back down. Didn't happen. It came down to 145.80 and then failed to break lower, started pushing back up again. Once it started pushing, I think about 145.95 thereabouts, I put it into the chat earlier this morning, or earlier today, this afternoon, was like, go flat on the yen, close out your trade, it's going to bounce back up, and what has happened is bounce back up, right? So yen is now on a bit of an upside move, right? But despite that, it is also reacting to this point. I want to see a reaction at 147. You can, and I have been scalping it up as well, just move up. I think it was, yeah, that 2 candles up, quick scalps. You can scalp it up from 146.40 up to 147. If you're not so much a scalper, then you might want to wait for a reaction there at 147. We saw a reaction to push back down. Dollar index now pushing back up, so it could push up. That dollar index pushing up towards the resistance would see yen pushing up towards 147. If the dollar comes back down, then we'll see the yen push back down again. Okay, so you want to see a reaction up at 147. All right, where am I? Okay, look for reaction at 147 resistance level. Okay, there we go. It's pushing up. Now, with the euro yen, it came test. It didn't test. It came up quite close. Now broke that level. Once it came up, so if you drag this right across, this is what or rather draw it again. We were looking for it to come up to this. It has to test, and this is how you look for a trade setup, right? It has to test that trend line. It has to reject before you would look to sell. So you wouldn't be looking to sell at that point. Take all that away. Now that it's pushed back up, right? So it's pretty much bounced at 38.2 in that support area and push back up. US yen is the one that's dragging it back up, right? If you look at the euro dollar trying to push down and it's not dragging the euro yen down at all, it's pushing it back up because of the US yen. Now, if you take that down 50% right there, that point there, okay? So if it breaks past this, then I would say the next key level would be up there, would be a relatively small trade. 162, nice round number. Stop loss tight at about 30. Take profit would be about 60 pips to the upside on the euro yen. Trend line is done. Take that away. So we're looking for it to break above that 50 level. 61.8 is a bit too near. I think that previous swing levels will make more sense. Okay. Then on to pound yen, same thing that we spoke about on Thursday. Drag it right across. So you could have got into that. You could have hit a 40 pip stop loss on that if you caught, if you rushed into it. Now at this point, I would say 192.40, 192.40, 40 pip stop loss, 80 pip take profit to the upside on the pound yen, right? Being dragged up by the US yen towards that resistance is going to drag the euro yen up. It's going to drag the pound yen up as well. Okay, so the yen pairs are ranking very high on my list. Still ranking very high on my list. Now with that, then we look at the US Swiss franc. Went up, right? I think Basanta or someone was telling me about the Swiss franc. It pushed up, it broke that trend line, it pushed up 23.6 up towards 61.8 and slightly beyond. That's all done and dusted. Take that away. That's done. Now, if I look at that point there, resistance, it's a bit odd. I think Diana asked that question as well last week, was US Swiss franc being a bit odd. It's not moving as much. You can see dollar index pushing up slightly right now this hour, and the US Swiss franc is pushing back down, right? Again, remember that today, although we don't have much news, we did just have the PMI at 49, so a bit of strength to the Swiss. But tomorrow we do have the Swiss CPI to be released. It looks like it's going to go from a minus 0.2 to a 0.1% CPI month to month. So with that, we might actually see this. It could push back down, but okay. What I think could happen on the US Swiss franc would be that it'll sit along this level for a while, push up those points there. Needs to break 38.2 before we'll see some downside. I don't think it's, well, it's always because the US Swiss franc, that's why I say I don't think it's worth that trade. 8460, stop loss 20, take profit. Okay, you could still do this. So you'll be looking at that. Break 38.2, 8460, 20 to 55 to the downside. What could happen is that it'll bounce around a little bit, but we're looking for that downside move, right? So US Swiss franc, we'll be looking for a sell at 0.8460, 20 to 55. 60, stop loss 20, take profit 55 to the downside. Then onto the US CAD, the loonie, it's not broken lower, it's bounced off this support level. Good support level bouncing off here. Now at this point, oil throws FX traders a lifeline ahead of US rates. Not too concerned about that at this point. I think it's going to consolidate. I think it might have a bit of an upside move, but it's got a big push down. So what needs to happen is that it needs to break above 1.3515. If you look at it on H4, ugly head and shoulder, inverted head and shoulder. I don't really do patterns, but that's what we're looking at, right? With that neckline there. So now that it's broken, tested, we're looking for it to push back up. Needs to break 1.3515 for that upside move, which means that this is a counter trend. You're looking at 1.3525, stop loss 20, take profit 60, 70 to the upside. Back up. I don't think you'll go all the way, but that's kind of target level that we're looking for. Okay, 1.3525, 20 to 70 to the upside. But considering that, 1.3525, stop loss 20, take profit 70 to the upside. Again, remember now if you look at this, we're looking at selling on the Kiwi. We're looking at possibly buying on the Aussie, pound, sell, euro looking for reaction, US yen looking for reaction, Swiss franc looking to sell, loonie looking to buy. We're all over, not all over the place, but we're setting up positions to try and take advantage of any potential moves, right? Prices have been a little bit consolidative, and we expect markets to be a little bit quieter. So these are the levels you look out for. It's not that you have to definitely put orders and get into those trades. You want to see what happens at those levels that it's going to react to. Okay, then lucky last, we're going to look at gold, which we were looking for this, could trade slightly higher, look for retest of 2500 to buy the bounce. What it did, this was Thursday, it came down, it pushed up slightly higher to that resistance level of 2530, right? I think I traded that up on Thursday night. Then it came back down, didn't do anything. It came back down to 2500. We were looking for that bounce. It pushed up slightly before back down again. Now trying to push back up. So same thing on gold. I would be looking for it to break above 2500 to trade up to 2515 as the first level, and then possibly 2530. All right, so gold break above 2500 to trade up to 2515 and 2530, needs to stay above 2480. Crucial. It needs to stay above 2480. Okay. Now, with all that said, please remember, if you have any questions at any point in time, put it into the chat. Let me know. Put it into the comments if you're watching this as a recording. Let me know. And if you haven't already, the link to get on my mailing list is there in the descriptions. Make sure you get onto the mailing list. And there'll be some stuff that I'll send out to you guys in the near future. With all that said, please take care, trade well, trade safe. Again, if you haven't already, do remember to click that like and subscribe button. I'll keep the stream running. No, I won't keep the stream running for a little while more because it looks like markets are pretty quiet. But if you have any questions, leave a comment or reach out to me on Discord. Take care now. Bye-bye.